Don't place a trade based on what you'll see in this video because there is no guarantees of making a profit in the market. It takes you a long time to become a good trader. So this video here is just to educate you to become a much better trader. Wait for the market to tell you what it's likely to do instead of you preempting. And that's the whole theory about, that's the whole factor about trade what you see, not what you hope for. Now, if I bring up, say, for example, let me bring up this, say, AG here for a minute, okay? And I'm gonna use this AG here as an example back here, right? What is really important is that if you can focus on, again, powerful chart reading and trading technique, when you get a period of sideways movements, if the market's been coming down and then we get a sideways movement and then we get a very strong breakaway bar, and it looks something like this, right? So for bullishness, the market's been rallying up, we have a bit of a sideways movement for a week or 2 or 3 weeks, and then we get a nice breakaway bar, right? Very nice breakaway bar. Nice high probability trade for a 2 to 5 day trade. What I mean by that is that over the next 2 to 5 days, we're likely to see a nice move out of that. Bam. Same for the downside. Market comes down, goes sideways for 2 or 3 or 4 weeks, and then gives you a very nice breakdown candle, right? But the candle must open. So the bar must open and also close. So open in the top third and close in the bottom third. For the bullish candle, it opens in the bottom third or the bullish bar and closes in the top third, right? It shows you strength. And if we can get a nice increase in volume, it's very probability. Like this one here, as you can see, it was actually the very next day. The very next day actually gapped down. Again, this is a short-term pattern for a short-term trade. And as you can see, it actually just gapped down one day. That'll be that trade done and dusted, right? Because we had a nice move. You should have received that over a 2 to 3 day move, but because it gapped down, that would have been the trade there, done and dusted. But as you can see, it actually then started continuing down even more past that. But the short-term trade would have been in and out one day. There are in this day, out this day. That's your trade done and dusted, right? Again, short-term plays. This is not about getting home runs or big fish. This is about having consistent, reliable trades that can give you nice, consistent, profitable trades as well too, right? And if I go back to a trade that I actually took as well too, which was last year, this one right here, right? Same, remember I said before, same for the bullish side. This one right here, as you can see, nice upward trend, nice sideways period, not much going on, and then this nice breakaway bar, an increase in volume, as you can see, right? And then as you can see, the market then started to continue on very nicely through there. Make sense? So there is one powerful sort of pattern and chart reading and trading technique you can use to start to apply to benefit your odds, right? Because what trading is all about, guys, is probability. Okay, it's all about probability. There is no certainties in the markets. There is no guarantees in the markets. But if we can start to see patterns like this, then there's a probability that we are likely to see a very nice move in the markets, okay? Now, the way that you trade something like this is simply this, okay? Let's say you have a trading account, and I'm just going to use, say you have a $10,000 trading account, all right? What you would do is that you would be trading this, but I would say trade options with this, right? That's what me and my private clients do. We trade options. And the reason why is because this move here doesn't look much. But when you start to trade money with options, you're in this day towards the close, and you might 1 or 2 days later, even if you're in 2 to 5 days, so this here 2 to 5 days, 2 days later, moved up nicely. This move here would be anywhere between a 60 and 100% return, depending on the volatility. Now, again, that doesn't sound like much, but before you know it, you start to accumulate that sort of effect, right? And so I would say have very small risks. I would say 5% of your account goes onto one trade, where you and it's all about protecting yourself, right? And then before you know it, you made anywhere between $250 and $500 on this one trade. Now, it's not a lot of money, no, but guys, I'm not talking about getting rich here. I'm talking about how do you trade something like this that over the year you can say, wow, you can build something up. If you can get to a point where you have a much bigger account, then you can slowly grow it. Now, based on what I just said there, your emotional boundary will test you, because if you're just starting to trade out, if you're just starting to trade out and then you start to try to trade a $10,000 trade straight away, and even if you did have a $1 million trading account or a $100,000 trading account, guess what? Your emotional boundary is going to be tested even with this type of trade. Why? Because one, you're not confident enough, and two, you're not there yet. right? So that's why I say always start with a $500 trade, even with a $10,000 trading account, right? And this is how I actually originally started when I first started when I first started actually getting ahead in the markets, because my first 2 years were horrible. But when I actually started getting ahead in the markets and I had a $10,000 trading account, I'd be doing $500 trades for 2 or 3 or 4 months to make sure I was doing the right and I was getting a very high win-loss ratio, which when I first started doing well, I got about a 70% win-loss ratio. The average win was about 70%. So you had the average win was a 70% profit, and my average loss was about a 25% loss. So as you can see, with a 70% success rate and these types of trades, I was doing really well, right? And then guess what happened? Then I was confident, and then I started going to $1,000 trades. And then with this account, and then I started going to $2,000 trades, which was 20% of my account, on each individual trade that I was taking there. And before you know it, then this account became $20,000. And before you know it, over the year or 2 years, I started building this up to $2,000 trading account, being disciplined. Then I started trading $4,000 a trade. And before you know it, all I really needed was 1 to 2 good trades throughout the month for me personally to start to live off this full time. Makes sense? And then that's the way it works. Now, obviously, you have your losses in there as well too. But if you could start to see how that works overall. Now, with this pattern here, guys, guess that the hardest thing for you is that the pattern that I just shared with you there, guys, and this here. This is a very basic version of the way that my number one trading strategy. Again, you get access to that. For the 2 people that take me out to take up the $2,500 75% off coaching, which is the very first thing in the description. The hardest thing that you're going to have, right, is that doing nothing in the times when there's nothing here, right? So you might have 1 month where you have 10 trades. The second month you might have 3 trades. The third month you might have 0. Fourth month, that should be 0 trades. Fourth month you might have 0 trades. Fifth month you have 6 trades. Oh my goodness, the 6th month there was actually 15 trades. See what I'm saying there? That is the life of a trader. You never know upfront. So that's why I say never try to set a monthly target when you're trading. Don't do that. Because if you're trading a system, sometimes the system's going to show up a lot throughout that month, and the next month it might be very quiet, right? Like for me and my private clients, right? Like if I look at, say, for example, one of my clients named Frank. Frank's done 50% return on his entire account just this last 3 months. He's one of my private clients there. But if you look at with my trading system, in January, okay, in January and February, we absolutely crushed it. We absolutely knocked it out of the park, smashed it out of the park. We had so many good trades, and a lot of them was really, really, really successful. And we had a really good start of the year, right? Guess what happened in March? 0 trades, absolutely 0 trades. But then guess what actually happened today? Today there was 1 trade that I actually took today, right? And so I'm in that today. So that's the life of a trader, right? So what's going to happen for the rest of this month? I don't know. My job is just to wait for these really nice setups and take them. And then I take them with good risk management and so on and so forth.